Hello, my name is Nick Davis. I'm a realtor with Remax Premier Group, and I live and work here in the Tampa Bay Area. Today, I'm at Iberia Bank with Kyle Edwards, and we're going to talk about the difference between pre-approval and pre-qualification and what you can do to better prepare yourself for the home buying experience. So, morning, Kyle.
Morning, Nick. How you doing, buddy?
I'm doing all right.
Good. Appreciate you guys tuning in this morning. Yeah, what we want to talk about this morning is just how to prepare as a buyer, how to prepare in terms of getting into the home buying process, and also what to expect, and really just kind of empower you guys and educate you on how to be the most prepared that you possibly be when you're getting into purchasing a home. So, a lot of folks have questions about timing, when to do that. You don't want to do it too early, don't want to do it too late, obviously. But my advice would be this, is that I don't think there's ever a time where it's too early to start.
Sure.
Obviously folks know, if you've bought homes in the past, if you're qualified, you know what your credit score is typically, and a lot of people do, but some people don't. Some people don't monitor that. Some people don't, really think much about that. But my suggestion would be, if you're thinking about buying a home, if you're within a year, I would say, start, contact a realtor, contact a lender, and just kind of get prepared, get some advice from that. And I would say first things first is obviously contact a lender. I'm always here. You can contact me. There's never, again, a time too early to start this process. And the reason why you would do it even a year in advance, Nick, is because if you're not sure where your credit is, and if you have some things that you need to work on, that would be a good time. So, if you've got some, credit card debt that might be affecting your credit score, if
Late
you've got
payments or something
late payments
like
that, or if you've got, some, maybe some medical collections out there that you're not sure, maybe just some old stuff you're just not aware of. It's always good to have your credit pulled. It's obviously no cost to you for me to do that, and just kind of see where you're at. And a lot of folks are concerned about, is that going to drop my credit score or something like that? And it's only a 2-point inquiry deduction to your credit score at that time. And after 90 days, you get the 2 points back. So it's nominal.
It's nominal. Yeah. And if somebody was to, say, shop around a mortgage, and they had a credit pull from you for an inquiry on a mortgage, and then they had one from somebody else, it's not going to affect.
That's absolutely correct. It's not going to affect it. And that's really kind of something that consumers are not, they don't really know. It's, what they really relate it to is maybe going to shop for a car. You go shop for a car, you go to a dealership, they might pull your credit 15 times with 15 different banks. Right. Yes, that's going to affect your credit score, but mortgage inquiries are completely different. You really have, the general rule of thumb is 6 or less inquiries within a 30-day period. Gotcha. That is the general rule of thumb, and it's only going to affect your credit score one time, because obviously mortgage inquiries are coded differently, and the credit bureaus are not going to penalize you from obviously shopping around to try to find the best deal. So, but yeah, in terms of starting the process early, having your credit pulled one time, and even if you're not going to be, looking to purchase something for 8 months, 10 months, if you're in a lease situation or something like that, it's just good to do that just to kind of get an idea. But obviously when you have your credit pulled, the credit report, keep in mind, is good for 120 days. Okay. So the pre-approval, when you get pre-qualified or pre-approved, that is good for 120 days. So from the time that you pull your credit to the time that you close, as long as you close within that 120-day period, you're good to go.
Okay. And so a lot of people have a misconception about pre-qualification and being pre-approved.
Right.
Like, I have people who will come to me and say, "Oh, I got a pre-qual from XYZ Mortgage online." Right. And I would ask them, "Well, did you verify documents? Did you submit? Did somebody?" And they, "Oh, no, I just put the information in online." Right. And to me, from a realtor standpoint, that's not worth anything to me.
It's not, it's not worth the paper it's written on, right? So, and it really, it's all about who offers that letter to them, right? Okay. And their their reputation, and what the name that's on that piece of paper. So here's the difference between pre-qualification and pre-approval. With the Dodd-Frank passing and all that stuff a few years ago, there was a lot of I'd say uproar or whatever in terms of how lenders are going to handle a pre-qualification versus a pre-approval. I will tell you that I use pre-qualification letters for years, but in terms of the way that I pre-qualified someone, it's the exact same way that I pre-approve them. So obviously we give pre-approval letters now. And realtors and listing agents and sellers, they feel more comfortable with that name approval on it. So basically what a pre-approval is and versus a pre-qualification, any lender, Nick, can give a pre-qualification letter with just a phone call and a general conversation. Right. You call me, you say, hey, Kyle, I want to get pre-qualified. I said, well, how's your credit? Oh, my credit's pretty good. Well, what's your income? And you tell me what your income is, what's your debts. And I can actually, by that and just you telling me that information, I can issue a pre-qualification letter without even pulling credit.
So if I wasn't accurate, then
I'm taking your word for it.
Exactly.
And again, it's really not worth the paper it's written on because, I'm fully trusting you, but I'm not verifying anything.
Okay.
Right? I'm
so
not even pulling credit.
Unverified.
It's unverified. Yeah, unverified is the key word. So I don't know if there's lenders that do that anymore. I would hope that there isn't, but that a lender can issue a pre-qualification letter with just a phone conversation with you. So
if there were some documents that you could tell a buyer that they needed to have, because this way, when they call you to be pre-approved, they've got it. They've got all the information and all the documents they need. What would you tell? What would you say? All right, put A, B, C, and D together.
Easy enough. Remember 2, 2, and 2. 2 years W-2s, 2 months of bank statements, and 2 pay stubs. Really 30 days of pay stubs, but I would say 30 days of pay stubs, 2 years of W-2s, 2 months bank statements. That's really it. That's really all I need. In terms of a pre-approval, that's really the information that we need to collect. Okay. If you're just a regular W-2 employee, 2 years W-2s, 2 pay stubs, or 30 days, and 2 months of bank statements. 2 and 2, easy enough. And if you are self-employed, 2 years tax return. So that would add another 2, 2, and 2. So the 2 years tax returns obviously would replace the W-2s if you're self-employed. So it's that simple. But in terms of a pre-approval, obviously we get an application, pull your credit. I run your information through an automated underwriting system, get you approved, verify your income, verify your assets, verify and pull your credit. It's as strong as you could possibly get from that standpoint. So that's really the difference between the two. And like I said, there's never a time too early to start getting advice, to start looking into where your credit is, how you can prepare, because obviously knowledge is power, right? When you're going into purchasing a home, you want to be as prepared as possible, right? And really. Really ready to go with your pre-approval, knowing what the numbers are, knowing what you can afford. And that's something else that I do is I run the numbers. I let you know, hey, we look at different programs, we look at different options, down payment options, programs, rates, all that stuff. So,
and in my experience, what I've seen is some of these XYZ lenders, they'll leave some, or their estimates are really not accurate.
Correct. Yeah.
And so if they put down $500 for insurance on a $250,000 house, we know that's not realistic. That the insurance is going to be somewhere between $1,200 and $1,500, depending upon the age of the home and flood and all that other stuff. So those pre-qualification letters or the good faith estimates, I can tell you because like I've used Kyle, Nicholas has used Kyle, our family's used Kyle, and this is going to sound funny, but I want you to stay with me for a second. His good faith estimates are always a little bit higher. So at the end of the day, if he said your payment's going to be $1,500, it might come in at $1,450, which is a great thing. But if it came in at $1,550, you'd be mad. So, when you got to take the good faith estimate as just that. And a lot of lenders will use that estimate word to not bait and switch you or trick you, but to say, well, this is just an estimate. And now all of a sudden your payment is $100, $150 more. Yeah. But what I like about Kyle and Iberia Bank is that his good faith estimates are always just a smidgen higher. So it always comes in with good news. Oh, I told you your payment was going to be $1,500.
Yeah.
Well, now it's $1,450.
Right.
No one's going to be mad.
Right. Exactly. You're only going to be happy. And again, it's about setting the expectations right
Exactly.
up front. And again, I go through the numbers in great detail, and and obviously got to use guesstimates for property taxes and insurance, but it's always, I always like to be a little bit more conservative on those numbers, like you said. And obviously, you're pleasantly surprised at closing rather than being, oh man, it's $50 more, and I was already on, felt a little bit uncomfortable with payment. So it's always good to be a little bit more conservative from the number standpoint, and I always try to do that just to. So it's closing is a great experience for you.
It is. Trust me, because like I said, we've used Kyle personally. Nicholas has used them. Like I said, a lot of members of our family, and he is our go-to guy. That even if you come with a pre-qual, or even better, a pre-approval letter from another bank, you might be pleasantly surprised to let us recommend Kyle and have him just look at the scenario, because sometimes you might be able to get a better rate. You may be able to get better terms. And when you're talking about a 30-year mortgage, just a difference of 0.25% or anything could drastically affect the overall
thousands of dollars over the 30-year period. Right?
Exactly. So, and it doesn't hurt your credit. But just getting a second set of eyes on your financing scenario is not a bad thing. And I'll share a quick little story. I had a client who, and this was several years ago, had a quote unquote no closing cost mortgage. And when you looked at the numbers side by side over the life of the mortgage, the no closing cost mortgage cost $42,000 more than what if they had just put,
or paid their own closing costs and went with a lower rate, because that's exactly what they did. They rolled the closing costs into the rate, so they're paying a much higher rate over a 30-year period. It's going to cost them 10 times the amount of it would cost the closing costs. Right?
It was $42,000 when we looked at and when we amortized it out. A no closing cost mortgage to save 2-3% of the purchase price wound up costing them $42,000.
Exactly. Yeah,
so
it doesn't make a lot of sense. So.
The estimate isn't really,
right. It's not apples to apples type deal. Right?
No, exactly. Right. So, getting the 2, 2, 2, and 2.
If you're self-employed, just 2, 2, and 2. Right. Exactly.
Talking with a lender before you go look at a house, because it may be very disheartening to find your dream home
and then you can't afford it, right?
And find out that financially you can't afford it. Right. So setting that expectation of, okay, this is the price point that I'm looking at, coming in with that pre-approval letter gives the seller a little bit more confidence.
Oh, absolutely,
because they know that
they've been vetted, right? They've been vetted.
Everything's been verified.
That's right.
It's not going to be a surprise. It's not going to be, 3 days before closing, sorry, we couldn't get you approved.
Right. And that's the worst thing that can happen. So be prepared and get prepared. So contact a lender first, and appreciate Nick summarizing that. Did a great job of it. And if you have any questions, obviously call me, call Nick. We'll help you through the process as much as we possibly can. And answer any questions. And, even if it's just like he mentioned, just doing a second opinion, just call me. Don't be afraid to call me. I'm not going to require, pull your credit, just to have a conversation with you about what's been, how you've been pre-approved, what program you're looking at, what your interest rate is, what numbers you're looking at. But definitely, when you're talking to a lender, get numbers up front. So
in writing,
exactly, in terms of what you're getting into. And I'll be happy to talk to you from a second opinion standpoint. Love the opportunity.
Awesome. So what I'm going to do is I'm going to put Kyle's information down in the description. I'll have his phone number, his email address, so you can reach out to him. And you can always give me a call at 813-300-7116 if you're looking to find your new home here in the Tampa Bay area. We've got a team ready, willing, and able to go to war for you and find you your new home. Talk to you soon.
Thanks.